think most of you have seen this, so just bear with me. That's what we're talking about today. So making tax digital. Right, just a quick reminder to people. This went out in our weekly news section as well. Don't forget that the notices have now changed. So the section 21 and the section 8 have changed, in that the notice period has gone back to as it was pre-pandemic. So 2 months for a standard section 21, section 8 grants 8, 10, 11, 2 weeks. So, but do be careful because there's a brand new form for both of them. The section 21 is a lot smaller than it used to be. A lot of the notes have been lifted out and put in a separate note section. You can get it all on the website. It was in the news as well, our news items, and it's on the weekly news as well. So that's everything there. So with no further ado, we're going to go into what we want to try and make this a regular thing, but we got caught last time because Jenny decided to go on holiday. Jenny, how dare you? For goodness sake. So Jenny from Mortgage for Business is going to give us a quick update on mortgages and what's happening there and how she can give you free money for nothing. So Jenny, away you go.
Well, do you know what? Actually, it almost is money for nothing. And the first thing I've written down here that I wanted to share with you is in terms of where pricing is. And actually, last week we saw the first rate go sub 1%. That's an offer from the Mortgage Works at 0.98%. So really just to kind of illustrate how rates are becoming more and more competitive, and that's across the whole piece. So we're particularly seeing a downward trajectory and pricing in the specialist end of the market. So by specialist, what we mean is limited companies, HMOs, multi-units, and those landlords with really, I would say, portfolios of more than 10 properties. The lenders that play in that end of the market, their pricing is just coming down week on week at the moment. The high street institutions are still on a downward curve, but what I would say is that they're not quite as voracious in terms of their repricing. So in terms of what that looks like, so as I mentioned, the lowest rate for personal borrowings with the Mortgage Works, it's at 0.99% at the moment. In the limited company space, the pricing is now starting from 2.59%, so really, really low. In terms of in the last month, what we've seen, last couple of months, in terms of criteria changes from the lender, we've seen a couple more entrants come into the 80% loan to value lending space. And I think why that's really important is really just this demonstrates lenders' confidence in terms of house prices and what's going on there. Lenders don't start increasing their exposure in terms of loan to values if they're expecting house prices to come down. So the fact we're seeing more and more lenders coming into this space really kind of shows they're expecting house prices to at least hold firm and, go up actually. The other thing that we've seen is a couple more entrants into the green mortgage space. Now, green mortgages are mortgages which are available for properties which have a certain EPC rating. It tends to be properties with a rating between A and C. In terms of how this is looking at the moment, I mean, look, the pricing which is available for these properties is quite nice, but you can still get more competitive non-green mortgage rates than you can green mortgage rates. So what I mean by that is the lowest 5-year fixed rate for limited companies is at 2.88%. The lowest green mortgage is 2.89. All the other fees are the same. So realistically, while it's really fantastic that lenders are really thinking about the green piece and really kind of turning their attentions to it at the moment, it's not competitive enough to be really, I think, meaningful to most borrowers. In terms of lenders and service, it's been a bit of a journey over the last 12 months. We've obviously had the sort of second round of stamp duty holiday ending in the last few days. The lenders have been quite slow, but actually they've largely caught up. Where we're seeing the delays now is, or where we were experiencing the delays in the run up to the end of September, was more with the solicitors. We find that solicitors have just been so busy, so snowed under, they haven't been coping. That's probably unfair. They've struggled to keep up with things. So for us, it's really the completion side of things which has been held up rather than the lenders per se. Lastly, just to kind of let you know what we're seeing lots of at the moment in terms of what our clients are up to. I know it's always quite interesting to see what your landlord peers are doing. So we are seeing, as you'd imagine, a huge amount of remortgaging right now because the pricing is very good. I think landlords are remortgaging, first of all, to raise money because they've been sitting around for a while. People haven't been doing a lot of buying lately. They're getting itchy feet. They want to grow their business, standard landlord practice, but also because the rates are so good. So as an example, I've got a client who's got a series of really old mortgages where the rate she's on is a variable rate linked to base, but it's kind of like 1.1%, that kind of lowness. Now she recognises that probably interest rates are going to start going up over the coming months. And so she's actually now remortgaging, losing those really great rates that she's held so she's been so protective of them for so long, but now she's looking into 5-year fixed rates because she recognises that actually over the coming months, that's where she's going to be better off. So a lot of people looking to kind of secure their position on pricing. The other thing I would say is that we've got lots of landlords, and I don't know if any of you guys are the same, but we've got lots of people who are thinking about buying. They just cannot find anything to buy at the moment. The amount of stock coming to the market is just so slow. I'm not sure quite what's going to break the cycle and whether it will kind of happen organically, whether there's going to be some kind of seismic event that's going to happen. But at the moment, people are keen to invest, but they're just not finding anything. So they're really just, like I say, remortgaging, raising capital and trying to firm up their position. We're not expecting house prices to come down based on the information that we're reading. They're going to hold firm and go up continually going forwards, albeit on a much more reserved level than we have experienced in the last few months. And lastly, just to touch on actual interest rates and what's happening there. We've got very high inflation, we've got very low unemployment figures now, and I don't know that we're expecting that to particularly change with the end of furlough. I think people are quite comfortable that unemployment is still going to remain quite low given the number of job vacancies that are in the market. And so what you would have heard is there's more chatter around than there has been with regards to base rate going up in the coming months as well. So if you are looking for a remortgage, the rates are really, really blinking good at the moment, as I've just said. And I think the pricing is going to start going up towards the back end of the year. And that's everything from me.
Lovely. Well, thank you very much. So I don't know if you're finding, you mentioned a backlog with solicitors. I understand a lot of the trouble is getting searches done.
Yes, yes.
Which is just so frustrating considering the majority of it's done online.
Yeah, we had access to a database actually, which is from a company called Searchflow, which I can share to anybody who would like it. It's in the sort of public domain. And the difference, I mean, the council where I live, Sevenoaks District Council, they're turning around in 9 days. Other authorities are taking, 30, 40, 50 days. So the difference is incredible. And you're right, it's online. So why does it take so long? I've got no idea.
Yeah. Yeah, I know. Sometimes we get the excuse come back to us, well, our staff are working from home. It's online. Yeah. It's online. Where's the problem? So,
we're all working from home, apart from me, obviously, who's in the office.
You still got your coffee, I'm glad to see. So, all right. Okay. Well, thank you so much. So, have we got any questions for, we got very informative for Rodney. Thank you very much.
Thank you.
Any questions at all before we let Jenny go? I mean, you're very welcome to stay. We're going to talk about tax next. So, no, nothing there. So, all right. Okay. I'm sure stuff will come up later on. So, Adam, the floor is yours now to talk about, well, we build this as making tax digital, but the government have pulled the carpet from under your feet again, haven't they? So,
yeah, they have rather. But yeah, thanks, Peter. Share my screen.
Yep. Okay.
Hopefully, everyone can see that.
Yep.
Perfect. Yeah. So there's a few little bits to have a look at today. Main focus was going to be making tax digital. Then just briefly touch on some tax changes on stamp duty and CGT, and then leave a bit of space for anybody to ask any questions they may have. So making tax digital, what does it mean for you as landlords? Making tax digital is going to become compulsory for anyone with a gross income over £10,000 from 6th of April 2024. Note, last time we spoke, this was going to be from 6th of April 2023, but as of last week, like many things, this has been kicked down the road by Rishi and pals in the government. So if this applies to you from April 2024 onwards, you will be required to send HMRC quarterly updates of your income and expenses via a digital tax account. The quarterly returns are going to be due by the end of the month following the quarter end. So for a March quarter end, you need to submit the return by the end of April. Your tax liabilities are then going to be calculated in real time, and the traditional personal tax return is going to sort of disappear. So instead of completing your full-blown tax return on or before 31st of January each year, instead you'll just need to sign a declaration that all of your quarterly returns were accurate and correct, and then the payment of tax will be the same due dates as historically. At least that's what we think at the moment. So what can you do to prepare? The key thing, the only thing that you really need to do is make sure that you're keeping your records on a compliant piece of electronic software. There isn't any way to avoid this requirement for anyone with rental income of more than 10k. So yeah, cut a long story short, you're going to need to get some software. HMRC have got a list of providers which can be found on their website or by clicking this link. For those of you that already use software, don't know much about it, we tend to use Xero with lots of our clients. It's a great bit of software. I'm sure as this gets nearer, letting agents, property management firms, they will start introducing software, specialist software for you as landlords that might be easy to use and perhaps a bit more intuitive for your businesses. But I think it's a bit of a watch this space, and with nearly 3 years to run now, it will probably be a bit of time before anything comes to market. But we would recommend that you make the transition as soon as possible. For one, you'll be ready for it when it comes. For two, your accountant will love you. There's nothing worse than getting boxes full of paper records from people. So the sooner you're on software, the better it is for us, and possibly the cheaper your fees will be. So win-win. And finally, once you've set up or got your software, you'll need to create the digital tax account that I referenced earlier. For those of you who already have government gateways with HMRC, this is not the same thing. You can use the same login details, but it's a slightly different aspect of the HMRC service. But again, there's a link below that you can click on to find it, or just tap it into Google, HMRC digital tax account, and I'm sure you'll find the ways to get that signed up. So before we move on, has anyone got any questions on this aspect?
No, you don't seem to have any at the moment, so you just crack on, Adam. So thank you.
Perfect. That's what I like to hear. So stamp duty, as Jenny's already mentioned, the stamp duty holiday, grace period, change of rates, whatever you want to call it, came to an end on the 30th of September. Every conveyancing solicitor in the world, or at least everyone I know, is super happy about that, because they can get back to working 23-hour days rather than 24, or at least that's what they tell you. So the SDLT rates have reverted to the pre-pandemic thresholds and levels. For those of you who've forgotten the old rates, or what are now the new rates, you've got 0% on the first 125, 2% on the next 125, 5% on anything between 250 and 925, 10% between 925 and 1.5 mil, and 12% on any purchases above that rate. And for most of you as landlords, you're already going to have multiple properties, so the additional 3% rate is going to apply to almost all of your purchases, I would have thought. That's residential properties. Don't forget, I doubt many of you are, but if you're not UK resident, there's also a new stealth SDLT rate of an extra 2% for anyone who is not UK resident buying residential property. And in case anyone is non-resident and is familiar with the residency rules, they've got a completely different set of rules for stamp duty. I say completely different, they're much simplified in that if you're not in the UK for 183 days of the 12 months before the purchase, you're non-resident, and therefore you pay the additional 2%. That does not mean that you would be non-resident for other income tax and CGT purposes though, so don't think that one might trigger the other. SDLT again, just for completeness, commercial rates, no change, 0%, 2% and 5%. Mixed use properties, again, I'm sure you all know this, but if you've got a shop with a resi flat above it, that's mixed use. so you'll pay these rates. Commercial is not defined, but anything that's not a dwelling again is not defined, but basically what you would call a house. And finally, if you are buying 6 or more houses at one point in time, you could treat that transaction as being commercial for stamp duty purposes, which will see a massive reduction in rates from potentially 15% down to 5%. But of course, you've also got the, I've forgotten the name of it now, the averaging provision, multiple dwellings relief, which could be more beneficial than this, but I'd very much doubt it if you were buying 6 or more properties. So any questions on SDLT?
You've got one, I don't know if you've seen it. Jenny, will tax be payable quarterly when it comes into play as almost as PAYE?
They're not saying anything at the moment. I think that is a lot of people's expectation, but all they want at the moment is just the information submitted to them quarterly. They're not currently saying that the tax will have to be paid on that basis, but I think the whole idea of it was to bring the self-employed, the landlords, in line with employed people who are paying their tax on a monthly basis. So watch this space.
Yeah, I think, as you say, I think it's a given, isn't it? Surely it's going to be too good an opportunity for them to miss in 2 or 3 years after they bring it in.
I think so, and to be honest, as much as people who are good at looking after their money quite like having the payment a long way off, the amount of people that just accidentally spend the money that they're meant to pay on tax and then don't have it 9 months down the line when they need it, this may actually be quite a useful budgeting tool for people. And with interest rates being as bad as they are, you're not missing out on much by paying HMRC a bit sooner.
Okay, all right. We've got another question, but I'll let you get to the end and then I'll ask the other question. So you crack on.
Excellent. So just capital gains very quickly. Nothing new. Who knows what we might see in the budget in a few weeks' time, but I think it's likely that will be a bit of a nothing budget. But just a reminder that since April 2020, if you are selling residential properties, you have to do an online CGT return and pay the tax within 30 days of that sale. That's not avoidable, and anyone who is missing those deadlines will be hit with penalties by HMRC. And just because you've done the CGT online, you still have to put that disposal on your tax return. You won't pay the tax twice, but you'll have to put it again on your tax return. And then there is a special box on the return to mark any tax that you've paid up front. Although, as I understand it, HMRC system isn't working properly, so it will not actually recognise that when you submit your tax return. In order to report these online returns, complete these online returns, you will need to set up a special CGT online account. This can be part of your digital tax account if you've already set that up for MTD. But again, it's not the same as your normal government gateway self-assessment login. It is something slightly different, but again, there's a link below to allow you to do that. If you do have accountants, tax advisors that you want to do these things for you, for whatever reason, the normal agency that we have for our clients does not allow us to submit CGT online returns for you unless you've created an account using this link and then give us special access to that account in order to submit a return on your behalf. So just because you're your agent for every other tax, we can't do this without you setting up your account. So it's unavoidable that you will have to do a little bit of admin before you can pass the rest of the admin off to your tax advisor accountant.
And could you just mention what happens, because I know there's an element of guessing with capital gains to fill out your form within 30 days. If it turns out you've overpaid tax, what happens about to getting it back?
I mean, as I say, if you're completing self-assessment tax returns each year, which no doubt all of you will be, then the gain gets reported again on that. That will give your actual tax liability, and you can offset for the tax that you've already paid at the 30-day marker.
Okay, thank you.
Excellent. So yeah, that's Everything. There's not much going on in the world of tax at the moment. I think Brexit and COVID has taken over, and there's nothing else to talk about apart from the fuel crisis. So yeah, if you've got any questions, then please do ask.
Right, we've got a couple come in. Let's just take an easy one first. If you pay tax quarterly, 1 quarter when interest breach is deducted will end up as a real mess, and you could be in credit. I don't know if you can you see the chat box, Adam? Do you want to?
I can see it. 1 quarter when interest relief is deducted will end up as a real mess. Not sure what you mean by this.
Tim, do you want to come online and just explain? Do you want to stop sharing your screen, Adam? So it's from Tim Holter. Do you want to come online and explain it? While we're waiting for that, we got one from Eric. I don't understand what is meant by the additional rate in one of the earlier slides.
That's the additional rate of stamp duty. So that's the 3% surcharge that you have to pay on top of the normal rates if you already own another residential property.
Yeah. Okay.
So it's going to apply to all of you as landlords.
Yeah. So that's where if you already own one property, as soon as you buy anything else for any reason, you have to add 3% to the all the rates which have been quoted before. Right, we're not getting Tim on. Am I right to assume that where a purchase is treated as commercial, the surcharge will not apply?
That's right, Rodney. The 3% rate only applies to residential properties. So if you're buying commercial properties, the 3% rate is not a thing.
So this is if you, and I think what he's aiming at there is if you get a small block with 6 flats in it, then that's treated as commercial. It's
treated as commercial for SDLT purposes, yeah.
Well, I think you did mention this. What about where you get a shop with a flat over? Because I know
commercial.
That's commercial, yeah. Because I know it was treated as commercial, so they've not changed that at all.
No, they haven't. No.
Right, okay. The 30-day CGT capital gains requirements only applies to personal holdings, not companies.
Correct.
Yep. Okay. I read these out because I don't know if everyone can see the chat box. So right, we didn't manage to get Tim back on. So Tim, do you want to ask your question directly, or here we are. There you go. When we are due returns, interest on loan is deducted at the end of the financial year returns. This will make the deducted in 1 quarter only. Does that make sense now, Adam?
It does to a point. I mean, yeah, you shouldn't be getting interest relief anymore anyway, Tim, unfortunately. But I guess when you're doing if you've got a normal buy-to-let mortgage, then most of them are going to be interest only repayments. So you may only get your interest certificate once a year, but if you're paying £300 a month in mortgage interest, then you could put £900 in every quarter. You wouldn't have to wait until the end of the year to then put whatever 4 times that is, £3,600 of interest through in that 1 quarter.
Okay. No more questions. Oh, hang on, one more. Thank you. Thank you, Tim. Thank you for saying that. Any more before we wrap it up? Doesn't look like it. So just to repeat what Rodney said earlier on, we will be appearing at the National Landlord Investment Show in Billingsgate on Tuesday the 26th of October. So I hope to see you all there. Do keep an eye on the meeting section in the can we put the slides online, someone's asked. So are you happy to send me the slides, Adam? Hang on, you muted, but I've got the yes. So
yes, I'll do that. Yeah.
Yeah. Okay. What I'll do is I'll send them out to the people that are registered for this meeting. So we've got another question up there. So you need to unmute.
Can you ask whether if you sell a building which had a shop in it, do you still have to pay the capital gain tax within a month, or does it go as used to be?
It probably depends how that's being sold. If it's being sold as a mixed use or commercial property, then you won't. If it's broken into two titles, one being a resi dwelling and one not, then you'll have to do it within 30 days on the resi dwelling part.
Sorry, I didn't get that. Is a shop with 3 flats sold as one? Is that a commercial sale or is that a residential sale?
It'd most likely be treated as a commercial sale if it all went through as one.
So is that you got to pay the capital gain tax at the end of the year?
Correct, yeah.
And not within a month?
Correct.
Okay, thank you.
Thank you for that. We always do stress to people to make sure that they that these are just general questions and answers that we got coming out. So if you've got specifics, you do need to make sure that you you get specialist advice, because you know, really do need to stress that. So if we can do, please. Right, any more for any more? So right, where I got to my reminders. Yeah, so Billingsgate on the October the 26th. The next monthly landlords meetup will be on the live one on Monday, November the 1st. And then, as we always do, we record the session. I'll put it out again on the Tuesday evening for anyone that missed it. Then I do generally send it out to people where they're registered. The one in November will be on auctions. So, you know, hopefully you can see that. Right, okay, Adam's just sent me the slides. Thank you very much. So I'll send those out later on. The landlords meet up in December will be on, well, we've got a couple of barristers on to talk about the government white paper. The noise on the street is that the government white paper will not be out in time. So what we've agreed was we'll just do a general legal update, etc., etc. Jenny, we've got a question for you. I don't know if you're still there, Jenny, so because I've hang on, just minimize my screen. Yeah, did you see it, Jenny?
Here, portfolio mortgages. Yeah, I mean, look, so
let me just read the question out for anyone that's not got it up in front of them. Hi, Jenny, is there much appetite for a portfolio of properties with mortgages at a low leverage?
Yeah, so there would be 2 ways that you could finance that. So first of all, there are lots of lenders who will give one borrower multiple mortgages across many properties, and that's fine. But there are also a couple of lenders who will do one single mortgage secured across multiple assets. So one of the lenders who's very good at this is Aldermore Mortgages, as an example. Being honest with you, if you don't have a really kind of deep desire to have a single mortgage secured against multiple properties from an administrative perspective, which is why people tend to prefer these, then actually your pricing is going to be better doing lots of little individual mortgages. That's where the better rates come in. But some people just want the one mortgage because, you know, it's less paperwork, which is understandable too. Okay,
thank you for that. If after we sign off you do think of a question, do email us info@ihouse.uk and I will forward them, because I know what it's like. We all do the same, don't we? We 2 minutes after we signed off, we got a burning question. We got another one from Tim for Jenny. Why is it difficult to get a mortgage of leasehold flats when you own the freehold? That's a good one.
That is such a great question. I love that. Okay, so basically, if you own the freehold and also the leasehold, and the lender repossesses your leasehold property, you can make life very, very difficult for repossession and resale. So, for example, you could really ramp up the ground rent service charges. You can make access very, very difficult as well. So what's happened is, in times gone by, a couple of lenders have come really unstuck with this, where they've had landlords in this situation. They've gone to repossess, and because they controlled the freehold, and they've made it nigh on impossible. And once a lender gets burnt once, they tend to suddenly, you know, throw their toys out and they all start really reacting to it. So that's why there are lenders who are very comfortable with that situation, I should hasten to add. So we've got lenders who are very happy to accept that you own the freehold, or you have a relationship with the company or the person that owns the freehold. Some lenders may ask for what they would call a comfort charge over the property. So there's no money associated with the charge. But what it does is it gives them the right to go in and take control of the freehold and manage the property in the event of repossession if you did start playing, you know, silly buggers with them, basically.
All right. Well, okay. Well, thank you very much, everyone, for your participation. It's all good stuff. And we look forward to seeing you again in the future. So leave you all to it. Okay. Bye for now.